Thanks for watching The 9.
All right, from tax day to your birthday, there are important dates to remember. You don't want to forget each year. Joining us once again with 4 key money dates to circle on your calendars, financial instructor Michael Masserant from the Retirement Education Foundation. And if you look closely, we are not wearing the same shirt.
Very similar,
yes.
very similar.
Michael, thanks and welcome back. So, okay, January 2nd today. What dates are we marking down on our calendar?
So the first one that comes up is April 15th. April 15th is tax day. And a lot of people get really worked up over taxes because I don't know why it is, but people get really stressed out about filing their taxes. It's not rocket science, to be honest. It probably could be easier and should be easier, but it's not rocket science. That being said, if we fall behind and don't figure out, don't get our W-2s in time or our 1099s for people who are not W-2 employees, don't rush. If you're trying to rush and submit maybe half-baked numbers on April 14th, just file an extension on your taxes. You'll have until October 15th. And the IRS would much rather prefer people file an extension on their taxes and do it properly than try to jam half-baked numbers into a tax return.
What's happening in November? November
1st is open enrollment typically for a lot of employers and healthcare. So if your health situation is changing, if you're getting married, having children, maybe your health changed throughout the year and this year, November 1st is the first time to change your open enrollment elections for healthcare.
And it seems far away now, but it will creep up quickly. December 31st.
So December 31st is year end for all tax things. And so a lot of people wait until December to do their charitable giving or their Roth conversions. And it's a nightmare. I mean, not only are people busy at the end of the year, but also all these companies and charities are busy also. So if you're trying to do a Roth conversion on December 29th, there's a chance it might not get done in time because all these companies can't process these things in time. If you're trying to give your charitable giving to a charity on December 23rd, they might not be open or around to accept those dollars, and those don't get on your tax returns for the current year.
Something to absolutely keep in mind. Now, let's take a look at birthdays because there are milestone birthdays that everybody's going to want to point to and look at.
For sure. So 59 and a half is the first one. That's when you can withdraw money from your retirement accounts, your IRAs, your Roths, your 401ks, penalty-free, 59 and a half. The next one is 62, and this is when people are eligible for Social Security. Now, Social Security...
You say Social Security with a smile on your face.
People kind of perk up. I don't want to get into this maybe today. We can talk about it in a different segment. But Social Security is one of the most mistaken puzzle pieces when it comes to retirement planning. People lose their minds, and I think there's an element of mortality involved with the calculation, and there's an element of the government's involved in that calculation, and we hear it all the time in the class. I don't want to lose my money to the government. It is such a large, important piece of retirement planning that people get wrong. There are so many factors that go into it. It's not about the gross dollars in your pocket. It's not about gross dollars. It's net dollars in your pocket. So we can tackle it later. And then the last one is 73. 73 is RMDs. Now the Congress has changed the age on this a couple times in the past few years. It was 70 and a half, then it was 72, now it's 73. So RMDs, required minimum distributions, are when you're required to start pulling money out of your IRAs or 401ks, whether you want that money or not. And that's a problem for a lot of people because they might not want all that income, but they have to take it, and it's all taxable income.
Wow, that is definitely an interesting way to look at it. Maybe people are living longer now. Is that why the age keeps getting pushed back?
So they keep sliding it back, which is a really great thing for the retirees, although they changed some of the inheritance rules for the next generation when they inherit the IRAs. So in the end, Congress is still getting their tax dollars. That's always their first priority. But it gives the retirees a little more wiggle room in terms of the age.
Any other dates we should focus on when it comes to the calendar? Maybe just an inherent date to look at your finances?
So people should, probably sometime in June or July, the middle of the year, have a day in your calendar to sit down and reevaluate. Okay, I'm 6 months into the year here. I've earned this much. I've spent this much. I've saved this much. How am I going to change things for the better in the second half of the year? Because if we're just floating along, like we talked about in the first segment this morning, if we're just floating along with no written plan or no idea, we're not going to make any progress.
Absolutely. And again, we talked about this in the first hour, but on the Retirement Education Foundation website, so many great resources on there. There's classes on there. The website is right there. I'm taking my first class tonight, actually, refedu.org. Financial literacy is 90% of it, right, when it comes to planning for your future.
It really is, because again, I keep saying this, but people just don't know what they don't know. And once you have that knowledge, now you can start start to evaluate the things you're hearing from family, friends, from different sources to see what's good stuff, what's not so great, and make a plan for yourself.
And even if you think you got it all figured out, a good refresher course is also pretty important.
We meet a lot of sharp people at the classes who come in and tell us, I thought I had this all nailed, and there are a couple things here I was missing that were important.
Right. Pretty sharp right now. Thanks, Michael. Appreciate it, buddy. Josh, over to you.